All right. So we have Erica, Leah together here today. We are both like, I don't know, traders on X. Wouldn't you say, Leah? Is that what we are?
Yeah, I mean, we met on social media on X.
Right.
That's a good part of X, that you can meet really nice people. And yeah, so we both are traders, and you are specializing on option selling mainly, and I'm more equity trader. So I would like to have a fun conversation with another female trader. It's so rare to find good ones.
It's great to meet another female trader. There aren't many of us. And I remember following you probably about, I think I came to X like 2 years ago, and you're very X famous. Like, how many followers do you have?
Oh, I don't even know. 68,067. Many, yeah.
That's a lot. I only have like 10, and I'm not really seeking too many more. The platform is sort of like a little bit odd these days. So I came to YouTube because I just really enjoy the conversation more here, and I think it's more informative. So, and we can have conversations like this that kind of like flow a little bit more, and you get to know people better. So, Leah, tell us more about what kind of trading you do, because we do sort of like completely different styles, and there's so many styles out there. But like, what's your what do you?
Yeah, so I'm a mainly equity trader, and I sell options sometimes, but just on my long-term portfolios when I own holdings and I want to allocate more into the position, or I want to sell covered calls. That's what I do. I don't sell options just for the sake of a profit. It's more an additional thing for me, but I'm mainly trading equities, and I love it. I found it after 2-3 years of trying all sorts of things. I realized that this really works for me and for my personality. So I swing trade. I own holdings for longer than 1 day. Look, when there is a beautiful momentum and I feel like, okay, I want to have a little bit of excitement that day, I will take a day trade, but it's very rare. And I love swing trading and position trading. So yeah, that's what I do. I focus on momentum trading and high beta tech stocks, or any sort of high beta movers that can move next week or two, and you have huge risk to reward on those. So that's pretty much what I do. How about you? Tell me about your strategy.
It's funny, like you say beta, and I'm like, that means nothing to me. So it's interesting how much it can differ, like the different Greeks that can matter to different traders based on what they do. So my main Greek that I'm sort of interested in that helps me make money is theta. So I'm really trading time on contracts to make money and using time to my. So I both sell options for my primary income, so covered calls, puts. And then I also do a lot of credit spreads, diagonal spreads, and buy some leaps. So that's kind of similar to what you're doing with the swing trading. Like a leap is almost a swing trade type of strategy. But I don't really use the beta to get me much there as the theta. So you have to, it sounds like you have to study charts a lot. And I see you posting charts, and I'm like, I can't even imagine the amount of time that goes into getting good at that. How much time did it take you to get good at that?
Oh, and I'm probably still not as great as I would love to be. I'm still learning. I'm still improving. It's like fascinating, because I read a lot of the CMT Association books, and they are 700-800 pages each. And there are hundreds and hundreds of indicators. But after a certain while, you realize most of them you don't use, and most of them don't really work. So I went from like completely confused and completely complex to just super simple, and I'm using just very simple chart patterns. I'm very visual. I love those representations. I'm having a really hard time when you just dump like a spreadsheet of numbers on me and I have to make sense out of it. That's not how my brain works. I love the graphic representation of movement and psychology behind it. So yeah, I when it comes to leaps, I mean, I'm buying leaps as well. More, as you said, it's like more position trade or investment, just with better leverage. If I don't want to just buy 100 shares of Meta or Microsoft, I would buy a leap or more of them then. And yeah, so I'm a technical chartist basically. And why beta? Because I want the stocks to move fast and in regards to the market, right? So I like the momentum, I like the fast pacing stuff. I'm having a really hard time trading something that's low beta, doesn't move. it's more for people they enjoy like less volatile portfolios. They want to hold dividend stocks, and that I will get there maybe in 10, 15 years, not right now.
Now you're living in the fast lane. So when did you start doing this, and why? Why did you start?
I've been investing in the stock market for over 15 years. And when COVID happened, I was just sitting on a lot of savings, and I wanted to learn something new, and I was really bored, and the market was super volatile. So February 2019, February, March, around that time, 2020, pardon me, I started actively trading and learning about trading. Before I was just investing, just like buy and hold and forget. And then now I'm literally every day with the market.
Okay. So were you always interested in the markets? And then you're like, hey, I see what sort of like cued me off to like, oh, I think I want to know more about this during 2020? Was it just everyone was doing it? Like, what was kind of getting you interested at that time? But
sadly, I grew up in communist country, so we had no chance to invest until a certain age. And then I lived in Germany, and the Germans are very risk-averse, so not many people really invest in the US stock market. They have super boring products that you make like 3-4% a year. So that was my way of investing, and I was buying real estate because that's all I knew. But when I was in the US late 20s, I started investing in the stock market, and my friends told me about it. They told me, hey, you need to start buying stocks and start like investing in the markets. And I had no idea how to do it. So I worked with UBS. I had financial advisor there, and I had wealth manager UBS first, and then I went to other places, and I just had money there. So I was contributing, and then I actually wanted to learn more about it because, again, my friend called me and said, hey, the market is falling. Like, you might want to deploy some of your cash or some of your savings into the market. You don't want to sit on the cash because the inflation is increasing, and that's really bad to sit on cash. Right. So I learned about inflation first. I started learning about those things. I have no economic background, although my mother is an economist and a tax advisor, which is ridiculous. I did not like any of that stuff when I was younger. And now I'm like, I should have listened to her. Would have been better to be in this industry since I was 20 or 22, not later on. I would be much richer now. But anyway, so that was how I started. I really wanted to learn about this. I said, you know what? I made good money. I was pretty successful in my life, and now I'm in mid-30s. Let me start investing and actively trading, actively taking care of my money. So I wanted to know what the brokers are doing. And also in COVID, like, my portfolio was down, I think 39%, that I was having managed by someone. And of course, like, they think long term, but I was like, you didn't know to like buy puts or something. I would. Then COVID started.
It takes them. I mean, everyone asks that, but like the real thing is that it takes them just too much time because they'd have to log into everybody's individual accounts and do a put, and it's not like they don't want to do that for us. It's like they physically can't. So it's just not an option. The only way to do it is to do it for yourself or get invested that knows how to do it. But hedge funds charge crazy fees. So actually, one of the ways that I got interested in doing this was at the time that I started getting interested in covered calls, because I got interested in it because a friend of mine, a business partner, was called me up one day and literally just said to me, it was like a moment in my life I will never forget now. He just called me up and he said, hey, I do this thing called options trading. I sell covered calls, and I'm just literally over here printing money. And I was like, what? Tell me more. So, he suggested that I go through and watch YouTube videos and get educated on how to do it, which I thought was a really big task to try to understand. But I ended up understanding it, and I was doing it, and I was doing it in an account I had a financial advisor on. And about 3 months into it, he starts to notice I'm doing this in my account. And he calls me up and he says, what are you doing? Why are you doing this? This is dangerous. Like, stop it. And I was like, no, I want to do covered calls. I want to set up aside a certain amount of money that I'm doing it with. And he was like, no, you don't know what you're doing. And I was like, explain to me the downside. Maybe I don't understand the downside. I'm new to this. He couldn't do it. He's just like, no, you're not going to be able to. So I kind of thought about it for a couple days, and I was like, I'm going to fire him. I'm gonna fire him. He's mansplaining to me, and I just really didn't appreciate it. You know, I was like, "You're done."
When was this? When did you start with this?
I mean, so the other reason that I fired him, though, Leah, was because he asked me and my husband to invest in his hedge fund that was managed by his group. Yeah. And they lost money for us during the Obama administration from like the bottom. Like we weren't invested at the bottom. We were sort of like that huge V shape that happened in after 2009. Like we started putting money in 2010, 2012, and they lost money going into 2017. I was like, I gotta be able to outpace this clown.
Yeah. But when did you start? When did you start learning about options? When was it?
So
how long have you been doing it?
I've only been doing it 8 years. But
that's a long time.
But it was like it was the perfect collision of like I was learning this thing and then I got mansplained to, which I really don't like. And I was like, I'm gonna take matters in my own hands and learn. And that's what got me started.
Nice. That's very nice because you know, people, they don't understand options. They say they're really scary. I think they're only scary if you don't know what you're doing and you don't understand your risks. And I love options. I spend a lot of time studying options. I enjoy, like, as I said, I do all those option strategies at times, but it's not my main thing. But I do spreads. I do all of those and I enjoy them. That's a nice additional income for me. But yeah, it's beautiful. I love the math around it. It's absolutely fun. But yeah, it's interesting. You focus on that. It's very, very interesting. So tell me more. Like you do it usually around the positions that you own, or you are doing it just from position like naked selling.
Oh no, I do it on position. So what I'll do is I trade like 8 stocks with options that I've selected for options based on the strategies that I trade. So I trade 7 trades, and they all have like variations of the trades primarily. Each trade might have 4 or 5 variations, but I've selected those stocks from a stock watch list that I've had for like 8 years now. And so when you've had the stock watch list for 8 years, they're all like quality stocks. So it's like the Amazons and like the Apple's world kind of things. So they don't change very often. They change here or there. So from time to time, I'll have to rotate more out of Apple and go more into NVIDIA, but it's pretty much the same group of 8. You know, that's kind of how it works for me.
Yeah. It's very nice because you specialize and you know the way they move, you know their characters. And a lot of traders I spoke to that were my mentors, they actually said that they're focusing on just a couple of stocks and that's what they trade. And that's it. They're not like all over the place because you never know how they're going to react, how they move. So yeah, that makes total sense. You
kind of have to go on the hunt for the right chart, kind of, right? Yeah. So how big is like your watch list then? Or do you have a scanner?
I have a scanner. We built scanner in my trading group called Trading My Sudden Data. So we spent like, oh my gosh, May 2024 we started, and now we finished the scanner. Now we are programming algo that will actually, we created a scanner that scans for stocks, and then we created also an indicator that shows us supply and demand on the stocks that we find with the scanner. So it's all now like in the process of building, and we are like adding all those pieces of puzzle together. So yeah, our indicator and our scanner is more option-based, option flow, institutional buying, implied volatility increase, and all this stuff. We have like 10, 15 criteria that we mixed into the scanner. So what I do usually on Friday, I see what the institutions did through the week and where is the flow, and then I look at the scanner for the weekend. And Sunday, I pick, there is usually 20, 30, 40 stocks that I can look at. That's my Sunday job, and it takes me about 4 hours. I go over all of them, but it's fast because I look at the chart, I'm like, nah, I don't like this. It has to align. So there has to be the scanner and it has to align with the chart. If the chart looks terrible, I'm not going to trade it because I cannot plan the risk to reward, and I can't have proper risk management. So I'm not going to buy this stock, and I put it off the watch list. So in trending markets, I have between 6 and 10 stocks on my watch list on Sunday into Monday. And when the market is choppy, I have about 2 to 4 stocks. That's it. We also observe rotations. So yeah, there is a lot of stuff. And as I said, like depends on the market. Like now we focus more on value stocks because we are headed into a very uncertain time in the market. So I'm looking at names that were super beat up in the last months or even this whole year, names that are down 80, 90% and 50%, and you have huge retests on many names. So I focus on those, and when the market is trending, I will focus on again the ones that are flying. It all really depends on the market mood. So that's how I do it. That's how I adjust, and also seasonality. You see what the institutions are doing.
Yeah.
You're trying to just observe what they do. Now I feel like there was a lot of rotation that happened this week. So into more like value stocks, and you look like a PG, Procter Gamble, and you see UNH. I mean, I don't want to talk about the stock, but yeah, these are defensive names. Or NVO was super beat up, biotech, pharmaceutical. These names are in interest for me now, for example. Yeah, and then again, when we're gonna dump, I will focus on the Metas and Amazons and all that.
Yeah, there seems to be like a little bit of I call it the flight to safety. It's sort of like we were dabbling in these, like, maybe they didn't seem risky to people before, but I always say that to people. That's one of the reasons why I'm always in the quality names, is because when there is a flight to safety, they come to me.
Yeah.
So that's always nice. So like, how was the beginning learning for you?
No, it was really confusing. It was awful. Like, I struggled for a long time. Probably 2 to 3 years were really weird. And the first year was actually really easy because it was 2020. So I got into the market myself in February, March. So whatever you bought, it went up. And my first trade actually was Delta Airlines. I lost $50,000 because I thought it dipped a lot, but it dipped much lower. And, in COVID, it was like, why would you buy airlines? I was just not thinking. Okay. So that was like, I had to cut my losses. And then I just started trading tag. And then I made all the money back times X. It was great, times 10. And I was like, oh, wow, Stanley Druckenmiller right here. And then I gave it all back again because I had no risk management. I didn't understand the sizing. I was just completely crazy.
So and
that was what I did, yeah. And I started learning then the second year, really. The second year was pain. And then the third year, I finally was like, okay, now I'm really like trading with system.
Yeah.
And now it's fine. Like
when I got my system too. Like for the first maybe year and a half, I was just focusing in on the covered call rollouts. And then I learned a credit spread that I was doing, the bear call spread. But after that, I sort of was like, okay, I'm ready to know more. And then I took about 2 years to learn my system. And by the third year, I was like, oh yeah, I got it. Like, it's all going to work now. So that was a really great feeling. But yeah, it was like 2 years of obsessive learning. And I think I have the personality type for that obsessive learning. It sounds like you do too, because, I think I met with you last Friday and you were like, I've just been looking at things all day. And I'm like, I know sometimes the whole day goes by and I will be just fascinated with anything to do with trading. So I will check you guys out that are swing traders and see what you're saying. Like, I notice things like you're like, I'm looking for A+ setups only. And it sounds like that's what you're doing with your scanners.
Yes, exactly. Just A+ setups, because that's the hardest part. You have to find the best setups. And sometimes, of course, I get it wrong. Sometimes there are 2 free stocks I like and I pick the one that doesn't work. It is what it is. It's not like I have a crystal ball. Like, you can have the best setup, the best scanner, and you get into this name and boom, it just falls on you. So it is part of the game, and you just can't have like huge losses. And that was the problem at the beginning. I would buy things and I had no stop loss and I would oversize, and then suddenly I was down so badly and there's no way to make the money back. So also now we pay attention to the economic news, right? We have tomorrow, Jackson Hole, Powell is speaking. He's going to be talking hawkish about the rates in September. The market is going to take a nosedive. And first thing that's going to go down is going to be crypto and all this super volatile, as you said, like things you probably don't really buy or trade because they are the ones that going to fall first, and it will be like all these quantum stocks and nuclear and all these things. They've been up 200-400% in 1 year. I mean, really. So I'm going to buy those when they fall really badly, like SMR, for example, or Oklo and all those. I'm happy to buy them because they're very cheap and they're going to be down 70-80% at some point, probably this year. I know they will. And then I'm going to be buying them. I have like orders on QBTS and all those funky names, but they make maybe 20% of my portfolio, and the rest I'm in mega caps or something that is more stable. And as I said, now I bought Lulu, for example. You know, I like the company. I think they're having a horrible time, but it seems like they're turning course. So yeah, that's pretty much my thinking. It's more complex than when people start trading. Oh yeah, let me make money. I'm like, no, there's so many pieces of puzzle you have to pay attention to. And it's a lot of work too, you know, but it's beautiful, as you said. We love it. So why not? You know, if I'm not gonna love it, then I'm gonna take all my money and put them in 4, 5, 6% a year dividend stocks, and I'm gonna hang out. You know, it's not that time. The time did not arrive yet.
No, it's not. I know people often ask us like, well, if you guys make so much money trading, then why don't you just like not do anything else? And it's like, we were talking about this on Friday. It's because that's boring.
Yeah.
And we're interested and we're like students of life and this. And so it's endlessly kind of fascinating to us. And I like to talk about it with other people, which is
of
like
course.
why we've gotten together. So do you have like a main strategy?
Yeah, so my main strategy, as I said, I love to trade stocks in strong trends. That's like number one. 80% of my trading will be in a strong trend. It could be up or down, I don't care. But if I go long, it has to be stage 2. If I go short, it has to be stage 4. I'm trying to stay away from range-bound markets and range-bound stocks. I don't like to trade the chop. Some people love it, I don't. I really pretty much love to trade breakouts. And when I see there is a lot of momentum, ADX about 25, boom, I take it long, a lot of volume, and just ride 5 to 10 business days, and I'm out. And then again, I like to position trade on big dumps. Like when we had April sell-off, I would buy Hood and Nvidia. Like this year, the market was down 10%, so it was a beautiful beautiful time. And you make 50, 100, 150% on some of those names easily. Hood, you make 300% or 250. So that's my strategy. I as I said, now I'm sitting on 40% cash. I'm waiting. I'm cash heavy, and I'm gonna wait for a nice dip, because why would I work hard and not smart? I'm gonna wait. And sure, tomorrow the market might go up. And what, it's gonna go up a couple of percent? Yeah, whatever. I'm gonna sit on my cash very happy. And I'm going to wait. And when we have a big dump in the market, 5 to 10%, the high beta stocks are going to be down 50, 60%. And that's when I'm going to hit it hard. I'm going to take the cash, boom, allocate and wait. It's most about waiting in this job.
It is a lot of waiting. That's what I'm doing with the theta. It's just waiting for those contracts to expire worthless or roll them out for more time.
Yeah. So for the people, let's talk about the theta, because I know what theta is, but a lot of people probably don't. It's basically the time in option. And if you sell options, theta works for you because it's killing premium of someone else, right? That's a fun one. I love theta.
It's just so easy. It's so easy. So I feel like I didn't have amount of poring over computer work and like looking at things that you did, but I did like totally vibe with what you were saying about like you like a visual pattern, and I do too. Like I can like look at a stock chart that's a 1 year and just go like, that looks like a nightmare to trade with my system. And I can look at another stock chart and I could go, oh, that looks like a dream, and I can just see it right away now, where in the beginning it wasn't as obvious. And when I have like a new student that comes to me, same thing, they'll bring a stock to me and they'll be like, what would this be like to options trade? And I'll be like, heads up, not good. Heads up, this will be a breeze. Like, let's do it. Okay, so then what do you think like your future looks like? Or what do you think the future of trading even looks like? Because right now you're talking about how you're having a scanner made, I'm having a bot made. Like we're all like adapting with these almost like AI resources kind of things. So like, what do you think it's going to look like a few years from now?
You have to. I think a lot of things will be automated. Brokers are amazing, like Interactive Brokers, Thinkorswim. You can build strategies on many of those brokers already. I know people there are building their own bots, and it's the future. You can use ChatGPT to code. I have a quant who is helping me. He's a coder and quant. He's helping me to put all this together. We work with my partner who's an analyst. So we are like analyst, trader, psychologist, and a quant together. We build all of this. We're highly qualified in that sense. There are a lot of people on X and everywhere. They just scalp options every day. I mean, look, they might be doing a good job, but I'm just a little bit skeptical there because you know, I do actually have school in psychology, and I have schooling, and I went through a lot of classes that I do have licensure to actually work as a therapist, and I don't do now anymore because I'm in this industry, but I did in the past. I worked as a counselor. So yeah, I help traders with the trading psychology, you know.
Yeah.
My partner went to actually economics, and he worked for a hedge fund in Switzerland. So he is also qualified to do this job. You know,
Yeah.
our quant is actually working for a hedge fund as a quant, and he's helping us now to build this. So we are a highly qualified group of people that we are trying to help traders. We're not there to give financial advice. That's not our thing, but we can help them to make their life easier. We give them data. And help them with the mindset and risk management. And that's pretty much what we do. Of course, we all make mistakes. Sometimes I take a trade that's stupid. But the difference between professionals and amateurs is you take the stupid trade once, twice a year. The amateurs take them every week.
Yeah.
And that's a huge thing. Like, I know traders that have been doing this job for 30 years, they still make mistakes. Or, you know, we get carried away once in a while.
Yeah,
but
there's
okay,
a euphoria. There's a
happens,
euphoria you can experience. So like the mind we're just talking about, I help people with their mindset too. And when I interview traders to see if they can join my program, if I don't sense a good mindset, I don't want them there. Sorry.
No, because it's a headache.
Yeah, it's a headache. And like, I can't really, I can take a positive mindset and sort of like help keep it there, but I can't take a bad attitude and shift it into a good one. That comes from the inside of the person. And so like, I know that you have a positive mindset. I do. Like, I actually think that my first job as a human being and as a trader is to manage my mindset first to being in that great space. And then all of the results come from that.
Yeah.
So I don't know how you feel about it, but like, how are you able to manage your mindset all the time? Is it proven results? Like, is it easy for you now because you have proven results, or did it start with the mindset first?
You know, I don't focus on that mindset as much. For me, it's more discipline. And discipline and psychology around the discipline, because I'm very like mathematical, so I love to see probabilities, and I explain people why this is important. They're like, oh, discipline, oh, let me do. No, because there are numbers that can prove if you do certain risk to reward, this is how many times you have to be right. If you want to be right 50% of time, or if you do one-to-one risk to reward, so you're risking $100 to make $100, you have to be right more than 50% of time to make money. You know, and if you lose $200 to make $100, guess what? It's 33 or 37% of time. If you're wrong, you already are losing money, right? So I have what I explain to people. It's very important, and to me, mindset. Yes, you can be positive, but I think in the markets you need to be mostly rational and understand the numbers and the math and the risk, and then know what's going to happen in the worst case scenario. So I'm almost thinking in the trading. It's more about you have to be actually really negative and think about what can happen the worst. Like seriously, like, okay, people are like, oh, how much money can I make? No, how much money can you lose? Because if you are not thinking about the risk, you can completely kill your portfolio, lose all your money, ruin your life. Like this is like serious shit. Like this happens. People lose everything in the markets. I know people, they lost all their retirement. Imagine 2021, 22. I spoke to people that lost millions of dollars. I lost $500,000 too. You know, so like it's crazy money, and it can really hurt. Like I was very depressed for 4 or 5 months. I was like horrible. And I made the money before, and I had money that I could afford this loss, but it sucked. For some people, they lose everything. They literally are in their 50s and lose all their money. It's horrible. Like imagine that's super traumatizing.
No,
so we need to be.
I can't imagine it. I don't want to imagine it.
Yeah, and it's true story. Like a lot of people did that.
That's why I'm all in the Apples and the Costco's and the Amazons, because I just don't like for a covered call writer, right? It's virtually impossible for those stocks to go to zero. So like for me, I am just like, my mindset is more like, okay, or my overall arching theory is that I believe in those companies 5 to 10 years from now. I'm keeping those companies no matter what. Maybe they drop for a certain period of time, like 2-3 months at a time, where I can't write covered calls on them because there was a market dip, like in April. Or to write covered calls on them for too low of a price would be silly, because they can retrace really, really fast. So for me, it's just the mindset part comes in as an options writer who's dealing with theta, that I can just take a breather when the market goes sour for a little bit. If all I know how to do is write covered calls, then I'm taking a breather for a couple months. It's okay. I've got other things going on in my life. But you know, I actually know how to trade more options than that, so I can take advantage of that. But there's people who are just there right now, you know, and that's an okay place to be, is to just make money off of just covered calls. It's incredibly lucrative, especially if you have a lot of money. Especially if you have a large account size. There's not a whole lot you have to do more than that to make a significant size hustle. So it's a really nice way to just kind of like pad the income that you have, or figure out how to retire early, which I find is like such a Are you there, Leah?
Yes, I'm here. Yeah, I'm in middle of tech mecca and I have very slow internet. Imagine that. We need to really fix our infrastructure in the US. Hello.
So, what else can we talk about today? Is there anything more that you really want to cover?
Yes, let's just take like one little cookie we give to everyone. Like, what is like one important thing that you look at when you want to take a trade? Just something people can learn from us, not just to hear about our lives, but like something they can take home with them. Just
what
like
is one little thing. I mean, my thing is always just, I never trade, everyone hears me say this, but I always trade stocks that have rising 5-year, 1-year, and 3-month charts. And if they don't, I don't really touch that stock. People will say to me like, well, what if it's a market pullback and the stock is, all the charts on the 3 months are down. And I'm like, and I just kind of stick with positions I have and like keep trading those known names that I'm familiar with. I don't add anything new in. So that's like a big one for me. How about you?
Well, for me also, like I want to be ideally in an uptrend about like 20 moving average. I sometimes take the reversal of 50 or 200, of course, but those are less high probability that they will work. And yeah, that's pretty much it. I keep it simple, you know, a couple of lines and volume. That's all I look at pretty much in my trading.
So that's it. That's your formula, huh?
That's the formula, yeah. And I went from like having spaghetti charts with 100 million indicators and looking at all of them confused to like, okay, volume and 1 or 2 charts, 1 or 2 lines. That's it.
So do you think trading is going to be something? Okay, so you already said this. You said that maybe you won't be trading forever. You're going to just pile your money in those 5 to 6% dividend stocks and sit on a beach somewhere or ski. I know you like to ski.
Yeah, I like to ski. You know, I mean, look, I will probably always sit on some cash and wait because the corrections come like almost every year. And we have, I don't know how much is like once a year is correction or every 2 years. And you have like pullback between 5 and 10% twice a year on average. So there are opportunities you can make money. And I think always sitting on some money that you can deploy and then play around with. I don't think I will ever stop with that. But I'm definitely going to be trying to get to the levels of this big mentors I started with that they literally take 4 or 5 trades a year and make a couple of millions and just sit and relax. They probably make even more than a couple of millions, but that would be ideal for me and deploy the cash, make the money and sit on the beach. Yeah, you know, that's pretty much what I want to do. Do something creative, write books, paint, play my piano. I don't have time for. So this is probably for me next 3-4 years and then I'm done with the active trading and I will just truly trade less and enjoy my life. So that's the plan. How about you?
You have a group. It's a Discord group. Is that right?
Yes, we have a Discord group, Trading Mindset and Data, and I have about 200 members there. We are trading every day together. I don't day trade again. I'm very conservative. Sometimes I take crazy trade, but usually I'm very strict with the risk management. I give people 4, 5, or up to 10 charts a week, depending on the market. I tell them when I buy those stocks, usually they have the levels already ready from me so they can execute on their own because I don't like when people wait for me and I execute and then I have to write it in the Discord. So it's always a couple of minutes delayed. So I prefer that people actually know how to trade when they join my Discord. I really do not want people that do not know how to trade because then I feel like they're totally puppets following me. And I just created courses of my trading, how I trade and what works for me. And these are all things that I learned from super famous mentors of mine. And I put it all together, picked from everyone what worked for me. I added a bunch of psychology into it, and I will be, I think, launching this in October, November. It's hours and hours of edits. So
how many hours do you think it is? I think I'm gonna do it.
12 to 15 hours.
Okay, that's not bad. That's not bad.
Yeah,
That'll keep me busy in the winter when the sun sets. So like 3:30.
Yeah.
I don't, you know how you're talking about, like, you know, you want to give people these exit points so that they know when to exit, because like everybody even has a different feeling of risk on that. Like some people want to exit for you, and people often want to join my mentorship program, and they often ask me, do you call out trades for people to do? And I'm like, no. And they're like, why not? I'm like, because we might not trade the same stock. So how is that useful to you? Like, are you sure you want to trade the same stocks as me? Like, you've got to do some thinking about that. And I definitely help educate people on what kind of thinking they need to do as to why they would own a certain stock, because there's high volatility stocks, medium and low volatility stocks that we can options trade with. So the whole idea of calling trades out, I agree with you. It's like really hard to do. And, you know, I'm trying to teach people from scratch. You're super smart because you've got people, like, you're giving them sort of like, is it Fibonacci bands? Is that what it is that you're doing? Or is it different?
I do that too. It just helps me, honestly. None of these indicators are set in the stone, but they help me approximate the prices and approximately see what my expectations could be with those. But honestly, just following the momentum and the volume is the best. And also, again, like, when it's a short-term trade and it has a really strong move, I get out, because usually after strong move, you have strong fall. So there are so many things into it. But yeah, everyone should trade their own things. Some stocks I trade are too volatile. People don't like them. Some stocks are too boring. They don't like them. So yeah, to each their own. Yeah, very happy we met and we did this interview. Yeah.
And we'll have to do it again sometime soon, because I know we wanted to talk a little bit about mistakes we see traders making, like common things that we could clear up really quickly for people. So maybe our next video can be
maybe we do it live and have Q&A for people. Yeah, that would be fun.